On December 1st, while you were still likely in a turkey coma or doom scrolling for Cyber Monday deals you absolutely did not need, the Federal Reserve quietly flipped a switch that changes the future of every single dollar in your pocket. They didn't hold a press conference. They didn't send you a Hallmark card saying, sorry about your life savings. In fact, look at the news from this morning. Literally minutes before I sat down to record this, the Fed announced a fresh 25 basis point rate cut. They aren't just stopping the diet, they are ordering dessert too. They signaled more rates are coming even. The reset pivot isn't a theory anymore. It is happening live. Most people think the economy is cooling down. They look at the news and see, hey, inflation is ticking down and think, oh good, we're safe. But wait, if the economy is cooling, why are banks quietly hoarding cash like squirrels who know a blizzard is coming? And why is Wall Street betting the house that the money printer turns back on in 2026? Because we are looking at the opening scene of Money Printing 2.0. And if you hated the sequel to Joker, you are really gonna hate this, unless you know exactly where to stand when the money hose turns back on. The shift, it's gonna touch you. It hits the stock market. It hits the value of your savings. It even hits the mortgage rates, as we know. The people who understand what changed on December 1st, they can move ahead freely. The people who don't are going to quietly, politely, and legally get robbed. So stick with me. We're gonna walk through how this plays out, why they're doing it, and exactly how you stop being the victim in their little experiment. To understand how spectacular of a mess this is, you gotta understand what the Fed pretends to do versus what they actually do. You see, for the last 3 years, the Fed has been on a financial diet called Quantitative Tightening, or QT. Basically, they were trying to suck money out of the system to fix the inflation disaster they caused in the first place. It's like trying to get toothpaste back into the tube by sucking on the nozzle. It's gross, it doesn't work, and everyone watching is uncomfortable. But on December 1st, they stopped sucking because the banks are running out of cash. Bank reserves, the actual cash they keep in the vault to pay you when you want your money, have dropped to levels that make nervous bankers sweat through their expensive suits. So the Fed had a choice. Option A, let the banks struggle and risk a crash, or option B, turn the money printer back on, dilute your savings, and bail them out. Guess which one they picked? They picked the banks, of course. And it gets worse because when they stop tightening, the next step is easing. That means printing money to buy bonds. And we know exactly what happens next because we lived through this horror movie just 5 years ago. So let's rewind the tape back to March 2020. The world shuts down, the economy freezes, and the Federal Reserve launched quantitative easing, which is just a polite Ivy League way of saying we are going to hallucinate trillions of dollars into existence. They printed money. They lent it to the US government, and the government sprayed it into the economy like a fire hose. Stimulus checks, PPP loans. I mean, for a minute, it felt like a party. Everyone had cash. The stock market screamed higher even though we were technically in a recession. It was a miracle. Except there's no such thing as a free lunch, and there is definitely no such thing as free money. Because every day you go to work and pay taxes. If the government can just print money, why are they taking yours? Because the money isn't free. The price you pay is the destruction of your purchasing power. We saw a small group of people, asset owners, get incredibly rich on paper, and most people ended up effectively poor. I mean, sure, maybe your bank account number might have looked slightly higher, but your grocery bill, your rent, your gas, and your insurance premiums went up way faster than your paycheck. Now, I want to show you the math on this, and fair warning, this is a math problem that would get you fired from a lemonade stand. Between 2020 and 2021, the US government collected about $7.4 trillion in taxes, but they spent $13.2 trillion. That is a deficit so large, it doesn't even look real on paper. So who filled the gap? The Fed, with a printer. And despite them promising us, oh, don't worry, inflation won't be a problem, inflation became the only problem. And you're still paying for it every time you swipe your card at the grocery store. And this brings us to the most important question you need to ask yourself right now. Who actually wins here? Because there are 3 players in this casino. 1, the consumer. That's us. We buy stuff. Player 2, the business. That's Chipotle. That's Amazon. And then player 3, the investor. the person who owns the Chipotle stock. So here's the loop. The Fed prints money, the government gives it to the consumer feels rich and spends it at the business. But the workers at the business, they don't keep the profit. The investor keeps the profit. So when inflation hits, the cost of a burrito goes up. The worker gets a tiny raise that doesn't really make even a dent in their rent, but the investor's stock portfolio doubles. This is why over the last 5 years, wages went up on paper, but they didn't keep up with the cost of being alive. Meanwhile, assets, stocks, real estate went to the moon. I mean, if you were holding cash, you lost. If you were holding assets, you won. It is that simple. And now the Fed is setting up the board to play the exact same game again. So knowing this, I want to play a game with you. I want you to imagine I handed you the keys to a time machine. You step in, you smell the stale sanitizer, and you travel back 5 years to March 2020. The world, it's locked down. The economy is frozen. Fear is the only thing trending. But you've got the knowledge that you've got right now. You know exactly what the Federal Reserve is about to do. Knowing that, what would you have done differently? You know, most people, the responsible citizens, did the safe thing. They hoarded cash. They paid off debt. They waited for the housing market to crash, which never happened, as you know. And what was the reward for their responsibility? Their cash lost 25% of its buying power. They watched from the sidelines while homes appreciated by 40%. Basically, they brought a knife to a bazooka fight. Now, what would the wise you do with that time machine, knowing what you know now? You would have bought every asset not nailed to the floor. You would have locked in a 30-year fixed mortgage at 3%. You would have bought rental properties that pay you to hold them. Because you learned the hard truth, when the Fed prints money, cash is trash and assets are king. Well, congratulations. You don't need a time machine. You're getting a do-over. The Fed ending QT on December 1st, that was the starting gun. The race is on. It is March 2020 all over again, and you've got a choice. You can sit there, paralyzed by the headlines, waiting for permission to move, or you can look at the scoreboard from 2020 and realize you need to act. Now, I know the objection. I hear it in the comments every day. Matt, I know I need assets, but I don't have time to find deals. I don't want to fix toilets. I don't want a second job. That is exactly why I built inflationdefense.com. This is my turnkey real estate solution. And maybe it's for you, maybe it's not. But knowing what you know now, doesn't it make sense to at least take a look? I mean, if you like what you see, take the next step and pick a time to talk to my team to get your questions answered. At least then you can say no thank you with confidence rather than hell no, are you crazy? Out of fear. Whether you choose to work with us or not, at least grab a free copy of the Inflation Defense Manual at inflationdefense.com. Or don't. But let's get back to the conspiracy. Why are they doing this now? Why end the diet on December 1st when inflation is still nagging us? Well, they've got 3 excuses, and none of them are, we want to help you buy cheaper eggs. Excuse number 1, the plumbing, it's clogged. The banking system is running on fumes. Banks have the lowest cash reserves since 2020. If they run out of liquidity, they can't lend. If they can't lend, businesses die. So the Fed is stepping in to grease the wheels before the engine seizes up. They are choosing inflation over banking collapse. Excuse number 2, the robots are coming. October 2025 was a bloodbath for layoffs. Companies are cutting costs, and a lot of them are explicitly saying we're replacing humans with AI. The Fed is terrified that if the job market cracks, the whole economy tanks. So their solution, flood the zone with money. Make cash cheap so businesses expand, build new offices, and hopefully hire some humans back. It's a gamble. They're betting that cheap money saves a structural problem. Excuse number 3, the political pressure cooker. Mortgage rates. Everyone hates them. Politicians hate them because angry homeowners don't vote for incumbents. The Fed knows that by ending QT, by stopping the sale of treasuries, they can help pull yields down. And if treasury yields fall, mortgage rates should fall. It's a way to stimulate the housing market without officially declaring we're bailing you out. Now, I can feel you getting a little angry. You should be. You feel like you've been running on a treadmill made of sandpaper. They tell you the economy is strong. I just heard it this morning. They show you charts saying inflation is cooling, but then you go to buy insurance or pay your property taxes, or book a vacation, and you realize your dollar is shrinking faster than a wool sweater in a hot dryer. You're not crazy. You're being gaslit by a spreadsheet economy that measures growth by how rich the investors get, not by how affordable your life is. You're living in a split reality. In reality A, the consumer world, you're getting squeezed. In reality B, the asset world, it's a party. And the only way to survive is to move your money from reality A to reality B. So how do you do that? How do you stop being the victim and start being the fortress? Well, it requires you to unlearn the single most dangerous lesson your parents probably taught you. And I want to talk to those of you who are obsessed with paying off your mortgage. And I know. Your parents told you debt is bad. Pay off your mortgage. Be free. And in a normal world, they're right. But we don't live in a normal world. We live in a world where the government is actively trying to inflate away its own $38 trillion credit card bill. In this economy, paying off a cheap fixed rate mortgage early is like bringing a salad to a buffet, only to find out that the salad costs $500 and the buffet is free. It is spectacularly stupid financial math. I mean, think about it. If real inflation is 7%, which it is, at least, and your mortgage interest rate is 4%, the bank is effectively paying you 3% a year to borrow their money. The value of the dollars you pay them back with is dropping faster than the interest is accumulating. This is called inflation arbitrage, and it is the only way to beat them at their own game. You see, the government uses it, the rich use it, corporations use it. You are the only one trying to be a Boy Scout with your money while everyone else is playing by the new rules. So here's your battle plan for 2026. Step 1, stop hoarding lazy cash. Keep a safety fund, sure. I like 6 months of expenses, 12 months if you must. But if you've got $100,000 sitting in a savings account earning 4%, while real life gets 7% more expensive, you aren't saving, you're bleeding. You are losing purchasing power every single day you sit still. Step 2, debt is a shield. Stop viewing a mortgage as a burden. View it as a short position on the dollar. You are betting the dollar will get weaker. And considering the Fed just ended QT on December 1st and started cutting those rates today, that is the safest bet in the history of gambling. Look, the Fed has flipped the switch. The floodgates are creaking open. You can either be drowning in the water or you can be on the boat rising with the tide. 2020 was a tragedy for the unprepared, but a massive wealth transfer for the people who saw the pattern. 2026 is the sequel. You have the hindsight, now you need the foresight. Stop hoarding cash that is losing value. Borrow depreciating cash to buy appreciating income-producing assets. But here's the catch. Even if you buy the assets, even if you use debt to buy them, you have only beaten one of the enemies. You see, while the federal government is trying to dilute your money through inflation, the state government is waiting at the back door to confiscate the wealth you just built. They don't use a printing press. They use a much blunter instrument. They use rigged property tax assessments to bleed you annually, and they use a nightmare called probate to loot whatever is left when you die. You didn't build a fortress just to leave the drawbridge down for the tax assessor. There is a specific way they calculate how much they can take from you. And there is a specific legal tool that you can use to freeze them out. I broke down exactly how that looting mechanism works and the defense tool you use to stop it in this video right here. You'll see exactly what the math looks like for your own property, so you can lock that door before they even try to open it.